Hello, everyone, and welcome to the pre-market show. We have James DeGarris from Macro Markets Group. James, how you doing today?
I'm doing very well. Probably not as good as you, considering you're over in Bermuda.
Yes. Well, anytime you want to come to Bermuda, you can. It's a very nice place to visit.
I'll have to take you up
Anytime you
on that
like.
offer.
Yeah. So we have a lot of data coming out now. We also have Nvidia earnings to talk about. How's the markets looking from where you're sitting?
We've obviously just had the weekly jobless data, and the data come in at 209k. Forecast was 210, so just slightly below. But from the European session, oil's up obviously over 2%. The dollar's up a little bit on the day, and the Aussie dollar's lagging. Gold's down less than 1%. Bitcoin's down a little bit as well. And we've seen a little bit of drop in equities, obviously pre-market. So not too much movement across the board, but we're still seeing that correlation between obviously oil being up and the yields being up and the dollar being up, like we've kind of seen a lot since the war started at the start of March, so over the last couple of months.
Yeah. I think it's been a very sort of two-sided trade. So it's either war on or inflation higher trade, where we see oil up, bond yields up, stocks down, or we've seen war off, inflation off, and that's where oil's going down, bond yields going down, and then U.S. stocks tend to move higher. So it looks like we're getting a bit of the war on trade right now, if we're seeing stocks cooling and then oil's back above 100.
Yeah, it's just that correlation like we spoke about potentially the last time I was on here, with obviously oil being the main driver behind the markets. Oil's up, and that indicates that the prices of oil obviously are up and inflation will be up. So if inflation's up, it means the Fed will obviously continue to turn more hawkish, and we saw that a little bit yesterday with the FOMC minutes. I think now the members of the Fed are more likely to want to raise rates than cut rates next. Obviously, that's pushing the Treasury yields higher, pushing the dollar higher, and obviously you're seeing indices and gold and Bitcoin a little bit lower. So it's just been a common correlation over the last nearly even 3 months now. And if you haven't clocked onto that correlation by now, it's almost a question of what have you been doing over the last few months.
Yeah. Would you be able to break it down a bit? Because I think some of our viewers, they really like when you come on the show and you have a way of explaining things. So if let's say you're new to trading or you're just a few months in, what would you kind of say in terms of the correlation, and like what's the best way to think about it in your opinion?
So in as simple terms as possible, but I may be able to actually bring up a good graphic in a moment to show it. So I'll have to see if I can get it up and show you, which I will be able to. So at some point we can kind of click and share my
Oh,
screen.
yeah. Do you want to do it? There we go.
Yeah,
There we go. That's the one.
if we can do that. So there's a post here from the Kobayashi letter, and it says that the US dollar and oil prices have never moved this closely together. The 60-day correlation between Brent crude oil prices and the dollar index, the DXY, is up to 0.55, and it's the highest it's been since it was launched in 2005. But essentially, this relationship emerged in early March when the war started, and historically, these two assets, the dollar and oil, move in opposite directions, as most oil is priced in US dollars globally, and a stronger US dollar makes oil more expensive for foreign buyers, which weighs on the demand. But this has obviously changed over the last few months, and to break it down in as simply as possible, obviously due to the war, the price of oil is going up. If the price of oil goes up, we all have to buy oil. Oil's bought worldwide by everyone. And, especially in America, like we'll take America, for example, we're speaking about the dollar. But if the price of oil goes up, that is prices going up for consumers. We consume oil, we buy oil. So if the price of oil is going up, inflation is going to start to go up. And if inflation starts to go up, it's a little bit like a scales. If inflation's up here, you have to raise interest rates to bring inflation back down. And then once inflation's back down, you can start to think about lowering interest rates. We went through this whole cycle during the cost of living crisis throughout 2021 and 2022, and then over 2023 and 2024. We went through this cycle where inflation was high. Globally, central banks had to raise interest rates to bring inflation back down. And once inflation was getting back down and it was close to their 2% mark, which is the goal for inflation, then they can think about lowering interest rates. And just as we was kind of starting to go through that cycle where globally central banks have started to lower interest rates and inflation was starting to kind of stay lower, we have the war. So obviously oil prices have gone up, inflation is going to start to go up, and if inflation goes up, it means the Fed will have to pivot and other central banks will have to pivot and go, actually, we won't continue to cut interest rates. We're going to have to think about holding rates where they are or potentially raising rates even higher again, which they obviously don't want to do, but they will have to if inflation shows that it's going to continue to go up. Now, if they raise interest rates, it's good for the currency. Think if you're a foreign investor and you had 100 million cash, what currency do I keep it in? What's going to give me the best interest? Will it be the dollar or the pound or the Aussie or the yen, whatever it may be? Now, if the Fed have to raise interest rates and they have to keep going back up, obviously that will attract more investors to potentially sell their stock portfolio or sell their gold or their silver or their Bitcoin, whatever it may be, and keep that money in cash and go, okay, I'll leave it in cash or in a treasury bond and get a safe interest. So obviously oil up, inflation up, interest rates up. And then if interest rates are up, more people will have demand for the dollar in this example, and the dollar will go up. Obviously from that, the other side of that is if the dollar's going up, gold would be going down, silver would be going down, Bitcoin would most likely be going down. And obviously stocks can go down off the back of that. Although we've had a surge in obviously the stock market recently and we've pushed on to all-time highs, I think a lot of that was probably due to the potential obviously peace deals from the war and the kind of AI revolution and earnings season that we've kind of seen come back into play. But in the grand scheme of things, high inflation equals higher interest rates, and both of them things are bad for the stock market.
Yes, and that's a great way to explain it in a way that I think it makes sense. There's a lot of, I think, intentional confusion and the use of big terms, and it's discouraging, especially for people who are brand new to this space. You break it down in a way that it makes sense, and you give examples that I think a lot of our viewers can understand. I just want to say a special thank you to everybody who is joining us today. We have Tesla Trader at the trading desk, ready to go. We also have Gregory Mata, and we have Felisa De Rosa, who's here as well. Michael is here saying good morning. Looks like a sunny day in Bermuda. Yes, it is quite nice, and I'm very glad to be back home for this week. We have George Mata as well, and then definitely a great breakdown coming from Terry Too Cool. So spot on, James. Absolutely spot on.
I guess the summary I would give on that for people that don't understand how economic data or news affects the markets, like a bit of data comes out and how will that affect the market? The simple question you have to ask yourself is, what does that bit of news or data mean for the central banks? And what I mean by that is, if there's high inflation data, what does that mean for the central bank? Oh, they would have to raise interest rates. So that's good for the dollar, bad for the stock market, bad for gold. On the flip side, if there was low inflation data, what does that mean for the central banks? Oh, they can think about lowering interest rates. And obviously that's bad for the dollar or bad for that currency and good for the stock market. And that could be used on employment data, inflation data, geopolitical tensions, whatever it may be. If you don't understand how a bit of news or data affects the markets, ask this simple question to yourself. What does that news or data mean for the central bank? What action would they have to take off the back of that? And it will give you how the market will react or should react.
Yeah, great explanation. And it's also very topical now where we have a changing of the guard with the central bank as well. Some new leadership with Kevin Warsh now that Chairman Powell has stepped down as the former chairman. So I think it's all topical. I think inflation has become the new narrative, especially in the last sort of week or two, with bond yields getting up to that danger zone. And I think investors are now asking the question, should I take some of my profits out of the stock market, out of equities, and go into something that's more guaranteed, like a 5-year or a 10-year treasury note?
Yeah,
and that I think
agree.
that's going to continue
Especially
to be probably be the narrative.
when we've had such a surge in the stock market as well, such a quick rebound. I think that's what investors could potentially be looking at, and maybe we, coming towards the end of the month, obviously next week, maybe we start to see that sell in May and go away narrative kind of come into play.
Yeah.
It will be an interesting few months over the summer, I think.
Yeah, that's the seasonality kicking in, and we haven't seen too much of it. I mean, like you said, we still have about a week left or so. So let's see if that seasonality does pick back up and give us a little bit of a surprise move. I do want to, before I forget, I do want to just remind everybody to please enter the duck race. We will be giving away a $5,000 account courtesy of our sponsors, City Traders Imperium. So if you're interested, I'll give everyone 2 more minutes to enter. If you want to have a chance to win, there's a link in the description, a link in the live chat. And then right above James's head that way, there's also a QR code where you can scan that as well for your chance to get a free $5,000 account. Can I ask you, James, on the spot, to talk a little bit about the terminal and how people can get access to the terminal?
Yeah, I can. If you want to share the screen on that, what we'll do is whoever wins the giveaway today can have a free month on the terminal. So the terminal, this is the macro markets terminal. Obviously, this is the homepage. Every day you get your macro briefings, the Asian session summary, EU session summary, EU and US opens, and obviously later on today you'll get the US session summary. You've got all of the recent news down the side. Obviously, we just had the weekly jobless claims. Any geopolitical news or any economic data, it will always be down here. Obviously, you've got your next webinar as well, which we're currently on, the one about Nvidia earnings. You've got your daily playbook, you've got your weekly outlooks that are posted over the weekend, your economic calendar and your earnings calendar. You've got the news feed, which takes news and automatically updates every few minutes, takes news from all of the top financial news providers. So whether you're focused on macro, central banks, geopolitics, Forex, equities, commodities, crypto, or bonds, you've got all of your news updated every single day, every few minutes. You've got the live headlines and squawk. So if you want to get news and economic data or headlines as quickly as possible, this is the way to do it. You obviously have your live headlines that come through every few minutes whenever there's a bit of news or data. Obviously, any key data will flash up in red, like the weekly jobless claims. And if you click up here, you start the microphone and you'll have the audio squawk coming through. So whenever there is key news, it will be spoken through your computer, through your phone, through your speakers, and you can react to it. There's Macro GPT, which you can ask any question in the world about the markets, and it will take all of the data and information from our platform and give you an answer. There's institutional reports, your trading view charts. You've got your currency strength on the day, cross rates, market heat maps. Obviously, once the stock market's open, there's technical analysis tools. You've got your daily risk sentiment, which obviously takes all of the day's headlines and gives you a risk sentiment for the day. Sometimes takes a little second to load. I hope it's not going to crash on me today. There we go. The week risk off, as you can see. Market sentiment has taken a decisive turn towards risk off due to the growing concerns about the US-Iran nuclear talks breaking down, alongside obviously the weak economic data from Europe this morning. So the early optimism from the day has kind of eroded. But there's market sentiment tools. You've got all of your interest rate expectations, There's a few more things on there, obviously, in terms of community resources as well. All of the webinars that we do are all posted back on here, so you can watch them back if you have missed them. There's educational tools. If you was lucky enough to be at our last event on Saturday, the 2nd of May, you can read Mandela's event insights and his slideshows from the event. And there's prop firm discounts, obviously, with our prop firm partner, City Traders Imperium. And there is also the opportunity to apply for mentorship. So we know how great a trader Mandela is. I'm sure most of the people watching this obviously tune in to his webinars every single week over the last few years. And he has a couple more spaces for mentorship. So if you are interested in being mentored by the wonderful Mandela and obviously learning the strategies that he trades and learning the psychology and consistency that it takes to go on and develop a track record like this for yourself, then you can go onto our terminal and go onto our website and you can apply for mentorship with Mandela by filling out the form, and our team will be in touch, and you would have to go through a interview process with Mandela to see if you're credible enough and would be accepted onto his mentorship program. But this is the terminal. There's loads of tools. It's your kind of one-stop shop, obviously, for trading. And whoever wins the giveaway today will get a 5K account from CTI and will get a month on the terminal as well.
Amazing. I love the terminal. One of my favorite parts is that squawk. It's simple, but it's like basically the voice of the data coming in real time. And that, for me, that's one of the highlights. I love that, just the real time ability. And it's sometimes things that are not on the calendar. It could just be a random Trump post somewhere that they'll catch everything. Yeah,
exactly. Like over geopolitical tensions, it's so important. It can be one headline that moves the markets, and people will go, well, where was the news? It wasn't a 3-star importance on the calendar. And it's like, well, it's Trump. He's speaking. He's going to move the markets. You have to be aware of what's going on. So that's the terminal. Obviously, whoever wins the giveaway today gets a month free. But if you're unfortunate that you don't win the giveaway, you can go to terminal.macromarketsgroup.com and do a 7-day free trial and obviously test it out over the 7 days. And I'm sure it will benefit and improve your trading.
Amazing. That is the terminal. So I will now, I think what we should do now is just get the duck race started. We have a total of, looks like 21 entries, and over all platforms we have about 39 viewers. So good turnout today on this Thursday, the 21st of May. I'm going to just copy and paste everybody's name who has entered, and then we'll get the duck race started. And then if we can maybe cover Nvidia earnings next up, James. You can touch on Nvidia. A lot of people are saying, well, since they did so well, why is the stock not moving at all? So we can touch on that a little bit, I think. Okay, here we go. So this is going to be a 5-minute duck race. All the best to everybody who has entered. And let's go to the set. All right, on your mark, get set, let's go. There we go. All right, we'll come back to this a little bit later on. We're going to do a quick commercial break, and we'll be back in about 30 seconds to touch on Nvidia and also look at SpaceX. Don't go anywhere, we'll be right back. We're back, and we have our extra special guest today. It's James DeGaris from Macro Markets Group. James, do you want to start with Nvidia or do you want to start with SpaceX?
Let's start with SpaceX, as I think it would maybe be the quicker topic, and then we'll cover Nvidia. And I think if anything as well, it'd be interesting to get some of your insight on Nvidia, because I know that you kind of specialize a little bit in obviously trading earnings. But with SpaceX, there was actually an article that popped up on the newsfeed on the terminal yesterday, and it was obviously that SpaceX have filed for the Nasdaq IPO, and that would be with Elon Musk retaining 81.5% of the combined voting power. So they've obviously filed for an IPO under the ticker SPCX, and I'm not too sure when that IPO will be. I think they're obviously looking towards the back end of the year. And I heard rumors a little earlier this year, maybe in the last couple of months, that it was potentially going to be combined with his other company, his AI company, XAI. It's a lot of X's. X Twitter, X SpaceX, XAI. There's a lot of X's. But
Confusing. It's
yeah,
confusing.
I'm not sure if they have merged them or not. I think there was a rumor about it before for the IPO, but reading through this article, it doesn't look like they're doing that. But it will be another big company, obviously listed on the Nasdaq exchange potentially later this year, and I'm sure there will be a lot of hype around it. Obviously, there's a lot of hype around Elon Musk related companies anyway, but I think obviously this will be a pretty big one for the future. What's your thoughts on SpaceX?
Yeah, I'm with you on that. I think there's been a lot of anticipation. I did pull up. I know we all like the Kabisi letter. I think I'm saying that right. So they did a nice little summary based off of the S1 filing yesterday. So it looks like, as you said, they're going to be doing their IPO. Looks like they're going to raise 80 billion with a B, and it's expected to. It looks like the date that they're targeting is June 12th. So that's less than a month away. Yeah, that's going to be coming soon. I do think that they did merge with what was the other X? Not X. XAI. Yes, so that one. I believe they did merge in advance of this filing. So it's going to be a pretty big package. One of the biggest IPOs in the history of mankind. So I'm going to watch it. There are a few ways to get exposure to it. I did see there was a post where they said that they're going to make some shares available to retail traders, but then there's also potential ETFs that do already own the shares. So it looks like this was from Kabisi as well. SpaceX is going straight to retail, so certain shares of common stock are going to be provided to some shareholders or clients of Charles Schwab, Fidelity, Robinhood, SoFi, and E-Trade. And that was actually in the filing itself. So I know a lot of people are trying to get the shares before the IPO in the hopes that they can get it before it actually shoots to the moon. And there are different ways that you can get exposure to it. I think it's going to be big.
I wonder how quickly between, if it is a June the 12th IPO, obviously listed onto the Nasdaq exchange, I wonder how quickly it becomes a top 100 and ends up on the Nasdaq 100. I wonder if that will be kind of marked by the end of the year.
I think it's probably likely. Everybody's talking about it. Even people that don't look at financial markets, people that don't care about it. It's on the regular news. So yeah, I would be surprised if it doesn't. I think we're living in an amazing time now to be in this field, in this space. I don't usually trade IPOs, but I'll definitely be watching this one very close.
Yeah, it's definitely worth a watch. It's obviously one for the future. And I think if you look at Tesla, you don't want to be probably sitting there in 10 years' time and going, I remember that day that SpaceX IPO'd and, you know, it ends up doing a Tesla. And I'm sure it probably will over the years. So I think it's probably worth keeping a close eye on.
Yeah, this is the ETF. So there are a few different ways to get exposure, I think, depending on where you're located. But this is listed in the US, and its ticker symbol NASA, and it owns about 10% of the ETF is SpaceX already. So you got to get creative sometimes, and this is the easiest way I've found to get some exposure to the upside before the June IPO.
That's a
All
good
right, so
insight.
thank you. Let's touch on Nvidia. Looks like we've had the winner of the race already. So congratulations to. Can you pronounce that better than I can?
Anytime
I
it's a
would say,
hard one, you put me on the spot and ask me to pronounce it. I'll say Cal Kalulu.
okay, if they're
When it's
insulted, you know
positive,
who
you
to
go, yeah,
complain
go
to.
with the winner. And when it's like Cal Kalulu, you're like, yeah, James, can you pronounce this one?
I'll just say Cal because I'm not offending anybody. This was the photo finish, number 8, Cal, and you had the proper pronunciation from James. If you have any problems with the way he said it, please send all email to James DeGarris. So you will be receiving not only a $5,000 funded account, but also you will receive access to the macro markets terminal. So
Definitely reach
congratulations.
out to Mandela to claim the account or send an email to info@macromarketsgroup.com and I'll send you over the link to get set up on the terminal for 30 days free access.
Beautiful. All right. And then the last one before we wrap it up was Nvidia earnings. So I'm going to just pull up the chart here. Last night was probably the most anticipated earnings of the year. The biggest public company and the heart of the AI boom. Nvidia announced the earnings that were actually better than expectations. And look at that. It has not moved at all. It's not even moved at 1 percentage point from yesterday's close. Any thoughts on Nvidia, James? Anything?
Obviously they beat estimates and the
Yeah,
data center revenue hit 75.2 billion. So obviously had um, a good report like on the headlines, you know, EPS coming above
yeah,
expected, revenue coming above expected as well. I was just trying to see about any forward guidance, if there
yeah.
was
I think I got
anything that I
something here.
potentially missed on that. The forward guidance was equally striking. They project
Yeah,
higher revenue than what they did, so it's a little bit of a surprise that it's pretty much near enough flat. Obviously,
yeah,
going into the open today, maybe we see a bit of that movement obviously come today off the back of the open, but I think the earning results have kind of arrived at a moment where investor scrutiny of AI is a bit intense. Obviously, they've posted another great earnings result and they beat another, beat expectations again. I think God knows how many that is in a row now that they've done that.
yeah,
But maybe that demand for chips, it's not softening and it's obviously a strong signal. But I think with the geopolitical kind of concerns on chip exports, and I believe obviously a lot of that is from Taiwan, maybe there's just a bit of concern obviously about the future and the kind of competitive pricing that you might get in the longer term. But is a little bit surprising that it was
yeah.
it's pretty much obviously flat, but then by the end of the day, it could be up 4, 5, 6%, and everyone could go, "Wow, what a great earnings!" You know. So I think you kind of
Yeah.
really have to wait for the open to get the kind of true reaction.
Yeah, I've noticed a pattern where Nvidia tends to have this big anticipation into it. I had a look earlier in the week at how it's moved over the last 4 quarters. So it usually doesn't move that much the day after earnings, but it tends to be everybody gets so anticipated and everybody gets so hyped up about it, super focused on it, and it becomes almost like an anticlimactic thing. It was only expected to move 7% today anyway, so I decided not to trade it in the end because I've seen the pattern of, eventually it will eventually make all-time highs. It's just not going to automatically happen on earnings day. And it reminds me of there's a simple quote that I did when we did the macro markets event in London, which is that the markets are not made up of Nvidia. It's not just Nvidia out there that's going to move on its own. It's made up of people. And if everybody is expecting Nvidia to beat earnings and everybody's expecting the price to skyrocket, chances are it probably won't do exactly what people are expecting it to do. And I think the longer you you study the patterns and you watch earnings, I think it becomes more, you become a little bit more aware, and you can use judgment and say, okay, I know Nvidia earnings is important, but the earnings day tends not to move, and so you don't have to trade it if you know that the pattern is it's not going to move, like it has not moved today. Then you can always be one step ahead of the crowds, and I think that's a little bit of what's happening today, where it's not going to make it easy for you. It's not just going to let you buy it the day before earnings and then tomorrow or today you're up 10-20%. It's a little bit harder than that.
I agree, and obviously we could still get a move higher today, and if Nvidia does move higher, there's a very strong chance that the Nasdaq moves higher as a result of that. But I personally think the Nasdaq's starting to look a little bit toppy. I mean, over the last 6-7 weeks, we've gone from 23,000, obviously off the lows from the war, up to what was it, about 29,650. Just shy of 30,000. So we have had a massive move over the last 7 weeks. We've moved about 7,000 points. For me, that move has taken us into the minus 127% Fibonacci extension, which is a massive extension, and this is on like a weekly or monthly time frame from the COVID move, which I have just put on my screen as well.
Here we go. Yeah, here we go. I got it.
So this
Can you highlight it?
Yeah, let me make this a little bit bigger. So this is obviously the COVID crash here, and we obviously COVID crash, and the markets bounced back really well. We had a massive kind of round of quantitative easing and money printing from the central banks, and this sparked inflation, but the stock markets obviously had an incredible return over that time. And this is where inflation started to go up and started to increase. I think the first higher inflation data metric on CPI was actually on May, I believe it might have been May the 14th, 2021. But I might be wrong with the data, but it was definitely May 2021. And obviously through this period, inflation started rising, and it got to the start of 2022 and inflation was up here, and they went, oh, wow, inflation's got out of hand. We're going to have to raise interest rates to bring inflation back down. So with high inflation and then having to raise interest rates throughout 2022, this is where you saw the last bear market, where obviously the Nasdaq and the S&P and the Dow sold off. And throughout this 2022 bear market, where inflation was still very high, I believe in the US it was kind of at a top of about 9%. They obviously in the Fed had to start raising interest rates more aggressive than any other central bank in the world, and we eventually pulled back to the 61.8 fib extension of that incredible bull market after COVID, and this was just before 2023. And when inflation was then starting to come down because they'd raised interest rates, we went through a kind of phase where inflation was up a little bit, so they were thinking of keeping rates high, and then inflation was down a little bit and they're thinking of lowering interest rates. But this mainly affected the currencies more than it affected the stock market, because what happened in kind of 2023, all of a sudden something was born, AI, and the markets obviously just took off. And throughout 2023 and 2024, obviously there was incredible rallies in the market and surpassed that previous high from the end of 2021, start of 2022. And we kind of had a big pullback, obviously, in March, April in 2025, when Trump announced his tariffs and we had Liberation Day, and that kind of few week flash crash in the markets pulled the Nasdaq back into this 0% level, which was the 2021 high, and obviously had been tested a couple of times throughout the years. And then, like we had said, that last year it was kind of, I think it was April the 9th last year, and this year it was like April the 7th, but that kind of seemed to be the low in the stock market, and that was the low in the stock market. Trump obviously paused his tariffs and we went on another incredible rally. But then over obviously the start of this year, the war has kind of pulled the Nasdaq back to this minus 61.8 extension, and then the recent surge in the Nasdaq has pushed us up to this -127%. So I think from this level, again, I could be wrong. Nvidia could fly 7% today, and the Nasdaq could go up, and it obviously could test these kind of levels again. But I think now, with what's going on in terms of the treasury yields being higher, inflation potentially obviously going up, interest rates are now looking more hawkish than they were dovish. I think Nasdaq's starting to look a little toppy at this level, and maybe over the coming maybe 4-6 weeks or so, you'll maybe get that kind of sell in May and go away narrative, and maybe you'll start to see a little bit of a pullback in the Nasdaq, which if you saw a pullback, maybe you'd be speaking a couple of thousand points, maybe back down towards 27,000 or so, even if you was to put a fib extension in kind of just on these levels from the war. Maybe you'd be looking, you know, that first kind of level 27,000, maybe even a little bit deeper between the 26 and the 25.5 mark. So structurally, on a big weekly, monthly time frame, on levels that were set out, you know, for 6 years ago now from COVID, we've hit a massive extension level on Fibonacci.
Yeah, I'm seeing that, and that's something maybe to watch between today and tomorrow as well, especially with Nvidia earnings out of the way. And I know you've noticed this, where the market likes certainty, and once you have like this big catalyst or this major event such as Nvidia earnings out of the way, sometimes that's when you get a nice flush of liquidity into the market, where people know where they stand. So I think that's definitely something to watch today and going into the weekend. Reminder that Monday is a public holiday, Memorial Day, I believe it is. So US markets will be closed on Monday. So make sure whatever you're doing today and tomorrow, you're happy to hold until next week, Tuesday, just as a friendly reminder. We've got a lot of messages in the chat. I don't want to forget anybody, but we do have to jump off in a minute. This question came from Terry Tuku. I think this was when you were talking a bit about the data from today. But you did kind of touch on that a little bit.
I think she was just reiterating the kind of statement I made, that if you want to understand the market reaction, ask the question of what does that news or data mean for the central bank. I think that's why the light bulb's there. It was like a light bulb moment. Maybe I'm wrong.
Yeah. Okay. Yeah. No, that makes sense. That absolutely makes sense. Then there was also something here from Pegs Trader talking about the barbershop index, and if people in the barbershop are talking about an IPO or a stock or a crypto or something, that is too late. So that's a good indicator. I guess that's free as well. Yeah, you can add that. Maybe we can add that to the terminal. Have a barbershop watch list. Everything everybody's talking about in the barbershop as well. So question here from Michael saying, what are you looking at today, James?
Today, we'll have my eyes on the stock markets a little bit, S&P and the Nasdaq. Also got my eye on the dollar. So in terms of actual dollar pairs, I'm mainly looking at euro dollar or dollar yen kind of slowly approaching that 160 mark again. But other than that, that's about it. Not got my eyes on gold, not got my eyes on silver. I think they've been a little bit of a more stagnant trade over the last couple of months, not really gone anywhere. And I say not gone anywhere, gold's moved from 4,500 to 4,800 and back down again. But when you compare that to the moves that we were seeing at the start of the year, it's not really the ranges that I'm kind of interested in for now. So mainly got my eyes on the S&P and the Nasdaq and a couple of dollar pairs as well.
Yeah. Okay. Yeah, phenomenal. It's good to kind of have a narrow watch list, and you know what you're looking for. Remember, one of the other shows that we did with you, you explained that you're focused more on correlations and you're looking for the momentum trades. So you're not going to just try and focus on 100 different assets. You narrow it down to the few that are working. So that's good to get your perspective there. And then this is a question here from the winner of the duck competition, probably feeling very nice going into the long weekend. Why does the stock, I guess Nvidia, not move even though they had the positive beat on earnings, positive earnings? And I think it's because everybody was expecting it to do well, and this market, this business is not easy. And so sometimes what you think is obvious is obvious to everyone. And if it was easy, everybody would be making money trading. So I think this is just an example of sometimes the things that we think should happen don't happen exactly when we think they should. And as James has rightly said, we don't know how today is going to finish. Even though it hasn't moved much at the start of the day, we still have the rest of today and tomorrow for things to actually start to react to the data and to the earnings. We do have a few questions here from the folks over there in CTI land. I'm just going to quickly pull it up. Looks like we have, let me just cover one or two of them here. A couple of thanks for the opportunities. Somebody asked, can you drop a link for a free trial? This is from Junior Keeley. So I believe they're talking about the terminal. How can they get, I guess, more information on the terminal if they're not the winner of the competition, James? I can put it in the description as well.
I was just about to say, I'm not connected to the chat, otherwise I would post it in the chat. But it's very simple. You go to terminal.macromarketsgroup.com. There's all the information you need. You can start a 7-day free trial. And if you have any questions, you can always reach out to me. The probably easiest place that I could mention right now is either email info@macromarketsgroup.com or Instagram macromarketsgroup.com. But simply go to terminal.macromarketsgroup.com and you can find out all of the information, all of the features of the terminal, and you can obviously start your 7-day free trial. Literally at the top, you just click start 7-day free trial. So it's very simple, but if anyone's got any questions, they can reach out to me at any time.
Amazing. Well, James, always a pleasure to have you on. And I think we should definitely do these more often. Anybody who was sort of confused and trying to figure out what do all these things mean, hopefully you were able to learn or take something from what was shared today. Any final thoughts going into, I guess, into the US Open in about 15 minutes?
Oh, I thought you was going to say final thoughts into the weekend, but maybe I'll cover them in a sec. Final thoughts into the US Open. I'd say just keep a close eye on Nvidia, and that might tell the tale for the stock market for the afternoon. And again, keep a close eye on government bond yields, because if they continue to go up, it will probably put more pressure on the stock market, and it will probably keep the dollar strong. And in terms of obviously thoughts into the weekend, you made a very good point. Obviously Monday is a public holiday. It's Memorial Day in the US, and it is a bank holiday in the UK as well. So I wouldn't be looking to keep any positions over the weekend. I'd be very careful about that. And I guess the big weekend news that is, after 22 years, Arsenal are finally going to be lifting the Premier League trophy. So I'm sure you'll be back from Bermuda to witness that.
Yes, I will definitely be back. I've come to Bermuda thanks to Lumina Fest. They're doing a great community initiative here, but I was unable to celebrate at Emirates Stadium. But I know we're probably going to lose some viewers who are not for Arsenal. But I wear my heart on my sleeve with you, James. It's been 22 long years. I actually was planning to read all the fixtures for Sunday today, but we didn't have time to read all the fixtures.
I was going to turn up and wear an old Arsenal shirt, but I thought I won't do that. No one will probably stay on and watch. The viewers might.
Yeah, that's the problem. Look, we know we're not gonna make everybody happy, but it's a fact. Arsenal has won the Premier League, and so anybody who has a connection to Arsenal, congratulations. And I think it's been a hard-fought season this year. We still have Champions League to come.
Yeah. So, unfortunately, I'm gonna miss that final though.
Yeah, well, you're not gonna watch it.
I won't be able to. I'm going to be 8,000 feet up Machu Picchu, a mountain in Peru.
Oh,
Timing couldn't be any worse. It
Well,
couldn't be
I
any
think
worse. I'll have no signal, no service. I'll be 8,000 feet up a mountain, biting my nails, thinking, have we beat PSG or not? And by the time I get back down, it'll take me 5 hours to get back down. I'll probably open it and it'll be like PSG 4-0, and I'll probably shed a tear.
no, it's not going to be that. It's not going to be that. I will message you. The funny thing is, whenever I watch an Arsenal game, I find that they don't play well. So maybe it's a case of you cannot watch it, so they're going to play the best football they've ever played. That could be it.
I hope so.
We'll see. We'll see. All right, James. Have a wonderful day, everybody. Thanks again. Feel free to reach out to us. All the information that you need is going to be down in the description. We do these shows each and every Thursday and Friday, 1 hour before the New York Open. We've had James DeGaris from Macro Markets Group, and we'll make sure we'll bring him back on in the not too distant future. James, thanks again for everything today.
Thank you for having me. I'll be back soon. Good luck trading, everyone.
Take care.